How much tax will you pay on $60,000 in South Carolina by special request, South Carolina? So we aren't going alphabetical. If someone says, can you do a video on Nevada, South Carolina? I do it. So I take care of my subscribers here at the Heritage Wealth Planning YouTube channel. So let's dive right into this. I have a sneaky suspicion it's going to be pretty favorable for the good folks in South Carolina. Is that the Palmetto State? I can't remember. But anyway, so welcome. If you like what you see here at Heritage Wealth Planning, don't forget to subscribe. Right down below, that little red triangle says subscribe, and then hit the bell. And Frank, I can't remember where that bell is anymore, but there is a bell to say you want to be notified for future content because we do a lot of stuff here. So let's dive right into this. Actually, it's funny. I had a guy yesterday, 2 days ago, who said he's worried about me burning out. And I only did two videos last night on the same topic. I was like, man, I feel naked. I didn't do as many videos as I normally do. And I did them kind of towards the end of the evening, too. I felt like, I'm missing something. And it's my YouTube addiction. So welcome aboard. I don't think I'm going to burn out anytime soon. So welcome aboard. If you don't see me doing videos, you got to watch those investment advisors out there because you know how much I talk about investment fees. And who knows who's lurking out there in the woods just waiting to take me out. Just because you're paranoid doesn't mean they're not out to get you. All right. So, so let's see what we got here. I need my trusty calculator right here. Okay. There's my trusty calculator and my trusty notepad. All right. So let's dive into the great state of South Carolina. And the first place we do is go to heritagewealthplanning.com, which is my website. So we're promoting my website here. Imagine that. But the reason for that is I got the tax tools and the interactive tax tools. So you want to click on that. I'm missing all right. Where's my pencil? All right, very good. And then the first thing you'll see is the Federal Interactive Tax Tool from the Tax Foundation, which you can use and you should create all kinds of custom scenarios for your own lot in life there for sure. And this is going to give you based on the Tax Cut and Jobs Act from 2017. But we want to scroll down here into it says the smartasset.com, and they've allowed me as well to use their website. And we're going to go to South Carolina and see what they can do. All right. So as always, we're doing $60,000 of total income, of which we're going to start with $20,000 in Social Security. And we're going to do $40,000 of IRA distributions. So let's make sure there's no pension here, and there is. So let's get rid of that. And we're going to do $40,000 of IRA distributions. All right. So then we hit enter. So, all right. So let's see what we got here. So $20,000 of Social Security, $40,000 of IRA distributions. You're paying $511. I got to write this down because the reason I got to write this down is because my book. My soon-to-be published book on the state-by-state tax guide of retirees is coming out, and 511 for South Carolina. So as I'm doing this, I'm also doing research for my own book. And then, the federal tax. Yeah, there it is. Federal tax of, single. Okay. I was going to say that was high. All right, so here we're married. Okay, so nothing in South Carolina. Okay. And that, again, the single... Nothing in South Carolina. If you're married, filing jointly, and you're born in 1952, and the reason for that is because you have $13,300 each of standard deductions, so you have $26,600 of standard deduction. You don't pay anything in South Carolina tax, but you do pay $28.71 in federal taxation. Man, just look at that. The difference between the two. Yikes! I mean, that's they call it the marriage penalty. I call that the widow penalty for sure. That's dicey right there, man. Look at the difference. $28.71 to $58.40. That's another $2,000 in taxes, $2,500 because now you got taxes in South Carolina too. All right, so now let's flop them around. We're going to do $40,000 in Social Security and $20,000 in IRA, and I already know the answer. It's going to be zero across the board. All right, so. A lot of people say, but Josh, why did we not pay any taxes on the same amount of income, for the Fed? So you don't pay anything in South Carolina. So we'll start off that South Carolina is very tax favorable when it comes to income tax for sure. But let's show you how you can determine what your tax is going to be for the Feds. And we got to use something called provisional income. Let me make myself bigger here. You can see I got my Cambridge, England shirt on. My wife got that for me because her sister lives in Cambridge. Never been there, but it's apparently a nice place to be. All right, so we want to take provisional income. What a provisional income will do is tell us how much of our Social Security benefit will be subject to taxation. And for provisional income, what you do is you take half your Social Security benefit and all other income. In this case, our Social Security benefit is $40,000. So we take $20,000 of our Social Security benefit, and we take all of our other income. In this case, is $20,000. So our provisional income is $40,000. Okay, a half of Social Security and all other income. Provisional income is $40,000. Now what we got to do is the Social Security Administration gives us three different bend points. 32,000 and less is 0. 32,000 to 44,000, 50% will be subject to income tax of your Social Security benefit, and greater than 44K, 85% will be. All right, so here's how the bend points break out. From 0 to 32,000, none of your provisional income is subject to income tax. From 32 to 44,000, 50% of that will be included in your adjusted gross income of your Social Security benefit. And then for anything over 44,000, 85% of that will be included in your adjusted gross income as tax as Social Security, and that will be your taxable Social Security amount. So here we had 40,000 as our provisional income. So the only amount that we have is we have the first 32,000 in this bend, and that's 0, and we got 40,000 minus 32,000, which gives us $8,000. And we times that by 50%, so $4,000 of our Social Security benefit is subject to taxation. That's it. And we don't have anything in this threshold. So we got 32,000 tax free. The next bend, we have $8,000. We times that by 50%, which means $4,000 of our Social Security benefit will be subject to taxation. So now we take the $4,000 of Social Security plus all of our other income. In this case, it's the 20,000 IRA distribution. And that gives us a total gross income, AGI, of $24,000. All right, so $24,000. Now we also, because we're over the age of 64, we're 66 in this case, we have 26,600 of standard deductions, which means our taxable income, all right, is negative 2,600. So let me just show you again. So our provisional income means 4,000 of the 40,000 of Social Security benefits subject to taxation. You add that to all your other income you have. In this case, is 20,000 IRA distributions. You add those up. That's 24,000 is your AGI, your adjusted gross income. But remember, AGI is before you take your standard deduction. So here we have a standard deduction of 26,600. Which means we have taxable income of negative $2,600. So we owe no taxes. Now, if you do the same thing in the other regard, you're going to have taxes. And the reason why is because now when we flip them over, our provisional income in that regard is $50,000, right? And the reason for that is because we have 40,000 IRA distributions, and we have 10,000 is half our Social Security. Because we have 40,000 IRA distributions and 20,000 of half of Social Security, which means our provisional income now is $50,000, which means we actually have 11,100 of our Social Security benefits taxed. Add that to the $40,000 of your IRA income, and that's where you get your $2,871 in federal taxation. So that's the thing, man. You got to understand the difference between Social Security and other forms of income can really people just don't get it, and they should, because you can really make a big difference. All right, so let's see where some of the best, most favorable places are to live in the great state of South Carolina. Again, from an income tax perspective, it's quite low. In fact, unless you're making pretty significant amount of money, you're not going to pay hardly any income tax. That's a fact. So everyone's like, I got to go to Florida, I got to go to Tennessee because those places have no income tax. Yeah. Well, South Carolina and Georgia basically have no income tax too for most taxpayers. All right, so what's number 10 up here? Is that Pickens, South Carolina, is one of the top 10. We got number 5 was that what's that called? Lake Wiley. Okay, don't know anything about it. But then you got down here. And you got Charleston, you got number 7, Belvedere. So I'm not familiar with any of these places, but let's look how they're defining it. So basically, we got Garden City, South Carolina, which is up in here someplace, right? Yep, Garden City, right there. All right, now what they're doing here is different from the numbers I just showed you. So what they're doing is they're taking a retiree who's got $50,000 of combined income, which is $15,000 of Social Security, I think it was $10,000 of IRA distributions, $15,000 of pension, and the guy or lady is working part-time for $10,000 a year as well. And they're saying at the end of the day, given all those sources of income, they're going to pay $5,400 in tax. Property tax rate is only 0.37. Sales tax is a little bit higher than average, that's for sure. That's where they get you in South Carolina. Fuel tax is pretty low. Property tax is pretty low. Income and tax in South Carolina is nothing. It's just the feds. And of course, Social Security is not taxed. So from a retirement tax friendliness index, 73.37, which is quite good. We did Connecticut not too long ago, and the highest there, the highest, most friendly was like 26%. And so here in South Carolina, 73%. Alaska was in the upper 90s. Alabama was in the high 50s. So you can see from a retirement tax friendliness perspective, South Carolina, and I knew that would be true, is quite high. And the reason for that is because the income tax is low. I would actually use what they do here is they'll say in terms of how they figure this out. And I mean, these guys do a good job. They calculate the effective property tax by dividing the median property tax paid by median home value for each city. So that's, I mean, just you can't get more specific than that. And they're saying, look, and that's where we're getting in Garden City, South Carolina, the median property tax paid divided by median home value, the average, the median property tax is less than 0.5%. I mean, that's amazing. Now, what they're saying, though, is they're creating an overall index to best capture the taxes that affect retirees from their perspective. And they gave a 4 times weighting to income tax, a 3 times to property tax, 2 to sales, and a 1 to fuel tax. I would have actually done it differently. I would have given a 4 times the property tax, a 3 times the income tax, a 2 times the sales tax, just because property tax can be a big bugaboo that you can't jump over it. You just can't. Someone's paying it. Either you're renting and paying it for higher rents, or you're paying it on your own. But at the end of the day, South Carolina is quite tax friendly. I don't know anything about up here in Oconee, Seneca. Oh yeah, that's Seneca. Huh? Greenville right there. Wait, that's Anderson, Greenville right there. Yeah, that's a nice place. Greenville, South Carolina, it has more restaurants per capita than any other city in the United States. It's a wonderful town. But I hope this helps, my friends. As always, if you like what you see here, don't forget to subscribe down below. Go to the blog at heritagewealthplanning.com. You can run your own numbers for sure. And then, of course, comments. If you have some info on South Carolina that we're missing, I'd love to hear it. And, of course, comments, questions, thumbs up always help me as well. So we'll see you next time. Thanks, guys.